So here we go, another rally in the market. Been a bit of a busy day, so apologies for the late video. I've only just managed to sit down and get something recorded for you guys, so a bit of a shorter one, but some key things to point out today. Very good day again in the market. It's great, it's absolutely great to see another great day in the market, and it's one of those that we have got to the point of view where we're in 2022. Do you remember them days where 21, 22, we've had these awful 2 years, and I remember every day you're going on your account and it goes down and down and down and down, and it's awful. It's awful. It puts you, even though it shouldn't affect you that much, you know, you don't want to get too emotionally attached to your stocks, but without doubt, when you're going on your account every day and you go, it's down and it's down, and even worse is when in 2021 and 2022, when those companies were bringing out good earnings and then they were like up for like a brief second and then they would go down. I mean, it was awful. But now to be in the total opposite, you know, 180 direction, and you know, if you said it, you know, at the end of 2023 we'd be in this situation where the S&P is about to break all-time highs and stocks are just going up every single day. It's fantastic, and also from my point of view, it feels so good because obviously to come on the YouTube scene for the last 2 years and have to say, I know it's tough, but it's going to get better, and now I can go, it's got better. It's absolutely amazing. You know, I took a lot of crap doing these videos for the last 2 years, and so many negative comments about, oh, this stock's down, and I'm like, well, can't help it, guys. You know, the market's down. When the market's like this, it don't matter. Everything will get dragged down, and now, you know, all those stocks that apparently were terrible stocks got comments about how terrible they were. Suddenly they've gone very quiet, as you know, all these stocks have done very well this year, whether it be Google, Hims and Hers, Mercado Libre, DraftKings. It's absolutely fantastic. So yeah, great from my point of view, and that just leads me on to point of view to shout out that if you're on the Patreon, there is an exclusive video out, which is the US portfolio review. So go watch that exclusive video and you can see how my portfolio doing in my US portfolio is doing. If you do enjoy the Patreon, £5 a month, Discord to talk to members about stocks, including me. That's the best place to get hold of me, and it supports the channel. So if you want to support the channel, because we stuck around making this content for free on the YouTube channel for the last 2 years in the bear market, and now you're getting the rewards, that is the place to do it, and I'll drop you 2 exclusive videos a week in return. And also, if you want some free shares, join Trading 2 and 2 with a link in the description. But S&P 500, so bit of a choppy day in the S&P 500. It was up, went down a little bit around the midday, and then it came back. So another 0.26% day. You know, if we could have a 0.26% day every day, I think we'll take it. Obviously not a crazy day, but it's a decent day. What was interesting to see is now the big stocks, the big mega caps that have carried us through most of the 2023 period, sorry. You know, you look at the likes of Meta, that was the big rallier during the start of the year. Obviously a stock that I own, that I'm up over 100% on in one portfolio and 60-something% in the other portfolio. Been a very good performer for me this year. And, you know, this one has kind of taken a break recently, and today, you know, it's the S&P is up, and yet this is down 0.4%. And the same actually happened yesterday with this one. You look at NVIDIA, once again, one of the key drivers for the S&P this year. Once again, though, taking a bit of a break. You know, since July time, the stock has only gone up 4%. So the second half of the year, it's taken a break, and once again today, it is up 0.4%. But you know, this was down a good amount as well today at one point, but not as much as like the Meta, but still one to point out. Microsoft, once again, one of the gems of the stock market, stock that I'm up on 240-something% on, 230% on this stock. And same again, you know, the rally came at the start of the year, but it's taken a bit of a break. Today, the stock's down 2% when the S&P is up. So you've seen all the big stocks that were the main causes for a big part of the rally at the start of the year, they're all taking the break. And the S&P is positive, and a lot of these are down. And the more impressive thing is when you look at the S&P 600. I mean, imagine if you've only bought this one in the last month. You know, imagine that. You know, we don't always catch the bottom here. I don't normally catch the bottom. And not that I aim to catch the bottom, but it is good when it does work out like that. But it's been on my mind for a long time, and it looks like I've just got it at the right time. And I bought the S&P 600, and obviously the fact that an index is up, you know, 7.44% in the last 5 days alone is fantastic, and up 10% already this month. And I mean, look at this. The S&P 600 up basically 3% today. So what you're seeing is the money drifting out of the S&P 500. It's drifting out of all these mega stocks, these big stocks that have held up the stock market this year. And the market is going risk on. It's actually going into these stocks that people weren't owning. These stocks that haven't really shown any interest for the last kind of couple of months, even the last, really, let's have a little zoom out, the last 2 years have just been not really doing anything. And we've had this little pop up at the moment, and hopefully that little pop up can continue in the S&P 600. But there's definitely that little bit of rotation going on at the moment. Adobe is down 6%. Once again, one of the stocks that comes into the category of being a very good performer. Not as much as what the other ones are, because this has had more of the rally towards the back end of the year. But what I was quite interested is going, okay, is there an opportunity? It's down 6%. Is this a time to go buy Adobe potentially? And then I was looking at the numbers, and the numbers were not really that bad, really. I mean, the beat on EPS, the beat on a revenue point of view. Sure, the guidance was maybe a little bit below what was expected. But I was like, is it a chance to buy Adobe? But I thought, the problem is with a lot of these big techs now, I mean, you're seeing Adobe at 49 times earnings. I mean, Adobe's a cracking company, and you're willing to pay a premium for Adobe, but I mean, what they're growing, 11% year over year? I don't think even at 11% year over year growth, I'm willing to pay 49 times earnings for it. So it kind of shows you that these big techs at the moment, they're kind of burnt out, and it's on the other parts of the market to rally at the moment, which we see in the S&P 600. And, you look at Adobe that's down 6% today and think, is it by an opportunity? But realistically, it's still richly overvalued. And I've said for a while, like, if the market is going to continue, it can't continue through these stocks, because these are, in my opinion, getting to stretch valuations now. If the market's going to continue, it has to be through these smaller mid caps, the ones that have sat out the rally a little bit so far this year. And that's what's starting to happen, which is really good to see that the rotation is happening into there. I was hoping that's what's going to happen, and that is what's happening. Another thing that was a bit surprising today, US November retail sales up 0.3% versus negative 0.1 expected. That was a bit of a shock. We expected to see a bit more of. At the moment, I mean, I'm going to do my predictions for 2024. I think at the start of the year, I said that the S&P 500, I think my prediction was for it to go up between 15 to 20%, I believe. I'll double check and watch the video again, but I believe that was my prediction. So at the moment, I am only 3% out, which I think is not bad at all. And to be fair, I mean, everyone said it was going to be a bad year for the stock market. I said it would be a good year for the stock market, and obviously got that right. So I'm going to take that as, even though I'm out by 3%, I'll take it as a victory that it was a pretty decent prediction. So, when you look at next year, everyone's trying to figure out, are we going to enter this recession? Have the interest rates now starting to take the toll? Are we going to have the recession in the economy? And it's coming really hard to predict. I mean, looking at a lot of forecasts that are starting to come out by the analysts so far this year, and so many are like, yeah, it's going to be a good year, and so many are still like, it's going to be a bad year. Like, it's a really mixed bag on the predictions of next year. I don't know what you guys think on what it'll be next year. I'm going to have a think about what I think next year will happen. In my opinion, it's definitely a lot harder to predict than this year. This year, I was really sure we were going to have a good year. The reason why is because I thought we don't normally have back-to-back negative years. I looked at the data for when inflation normally peaks and the average rally. I looked at what potentially the average rally is when the Fed stop increasing interest rates. And with a combination of that, I got my figure. This year, I'm looking at trying to find data points, and the data that I'm actually finding is actually quite negative. Like, the normal year after the Fed actually starts bringing down interest rates is normally a negative year in the market, but at the same time, that's a negative year normally because we have the Fed cutting rates because a recession's happened. But what potentially could happen this year is that we don't have the recession, but the Fed bring out interest rates, so maybe the S&P does return more positive than what it normally does when the Fed cut interest rates. It's a tricky one. I'm having a good think on it, ready for my predictions for 2020-24 video, and it's a hard one, but the data that's coming out is so mixed. You're hearing negative data somewhere else, like you're seeing Etsy cutting jobs, and you think, well, if they're cutting jobs, they're seeing weakness. And then you have something like this that comes out, which says US November retail sales is better than what's expected by 0.4% as well. So it's a really mixed bag out there. If it's going to be, if it's going well, if it's going bad, if we're going to have a good year in the market next year, we're going to have a bad market the next year. It's really hard to predict anyway at the moment. So yeah, last one is the UK stocks. I mean, US stocks were decent today. Big caps obviously the big rally that was happening in the markets was from the smaller caps, but the other big rally that happened was in the UK stocks. The reason why the UK stocks, so you can see the FTSE 250 was up 3% today. The reason why the UK stocks rallied is it was a slower reaction to the US news last night. Obviously, we got the US news about the Fed, that they did a big pivot. And because the UK markets were closed, they eventually, when we opened this morning, they played catch up and went, right, we're going up as well. And even though the UK didn't even come out, or the Bank of England didn't even come out and set out their interest rates, because everyone knows, they're basically staying at, they're looking at the US, they're staring at the US, and going, right, whatever you do, we're going to do that. So everyone knows that the Bank of England's currently playing copycat to whatever the Fed do. So everyone that saw the Fed news last night and went, we don't even have to wait to what the Bank of England says. We know you're playing copycat. So when the markets open, because they weren't open when the Fed news came out, that's when they had the jump up to have a bit of a catch up to the US market. So that's why we saw a lot of the UK stocks doing really well as well today, which was probably the bigger rally. That was a really nice pop up in the morning anyway. So yeah, it's definitely a very interesting time in the market. The Santa Claus rally is definitely on. It's been a fantastic year. So well done if you've stuck it out. If you stuck it out through 2022. I thought, it could only be a dream that where we are right now in 2023, and we're getting there. We're getting there. It's looking a lot better, isn't it? So hope you enjoyed this short and sweet video today. Anyway, hit that like button. See you in a bit.